Hi there, welcome to Kneppy Invest. One of the whole reasons I do this video channel is to share ideas with you. Now, it's up to you to take these ideas and decide whether these ideas or these companies deserve a position in your portfolio. And in today's video, I'm going to reveal 6 companies that do feature in my potential buy watch list. Now, just because these companies are on my potential buy watch list, it does not mean I will take a position in any of these companies. The 6 companies I will be showing you in this video, 4 of these companies are small cap companies, a mining exploring company. 3 of these small cap companies do generate revenue, are profitable, and operating cash flow positive. Also show you 2 fallen favorites. These companies have been fairly popular among retail investors over the past, 2 to 6 years, and the share price of both these companies are looking interesting right now. One of these companies had a financial update the other day, and that financial update showed they exceeded $150 million of annual contract value, and this company is growing, the share price is going the other way. So that's why that company is interesting. And the reason I put that on my potential buy list is just the reaction from the market will be highly important to whether that company becomes a buy in the future or remains on my potential buy list. So let's get stuck into it, but I'll just reveal the 6 companies that I'll be featuring in this video. The 4 small cap companies I'll be featuring in today's video are Xantippe Resources, which is a lithium explorer in northern Argentina. And I do expect that company's share price to really take off simply because of the hype and the hype in lithium right now. Not sure how long that hype will last. It could last for a few years longer. And it's really only been the last few months where we have seen Xantippe's share price starting to go up. The other 3 companies are real companies that do produce revenue, cash flow, even are profitable at this point in time. And they are Visen Limited, Rectifier Technologies, and HRL. We'll talk about what these particular companies do when we take a look at their chart. The 2 fallen favorites I'll take a look at are Mesoblast and Nearmap. Mesoblast is looking interesting just based off where the share price is right now at a really, or just above a really strong support level. We'll have a look at the weekly chart for that. And Nearmap was a company that did release an update to the annual contract value upwards of over 150 million. And I think there is possible value right now for this company. They are growing. But the thing they have to show me moving forward is that they can translate that annual contract revenue into operating cash flow positiveness and profitability. They haven't quite shown that to me just yet. First company I want to feature in this video is Xantippe Resources. This is the lithium explorer in northern Argentina. I think they have 2 projects there. It's in this area, which also includes Bolivia and Chile, which is fairly important region for lithium. I forget what it's called, but if you remember what it's called, just leave it in the comment section of this video. Anyway, if we go back to last year, or the majority of last year, 2021, share price of this company was trading between 0.1 cent and 0.3 cent, fairly low volume. But we started to see higher volume coming through towards October, November last year. And on the back of the higher volume, we saw the share price starting to increase. And then the share price really took off at the start of 2022 in January. In fact, the share price rose from 0.5 cents to 1.6 cents in a few trading days. Then the share price pulled back to 0.5 cents on lowering volume. Then all of a sudden, over the past 2 weeks, we have seen another explosion in volume, and we have seen the share price starting to go up again. That's exactly what we want to see. We want to see the share price go up on increasing volume. And when the share price pulls back, we want to see low volume there. That's telling us that these moves up is all because of buying, and the moves down isn't because of selling. It's because there's just a lack of buying through those little periods. And that's really important. You don't want to see high selling or large amount of selling. That is telling us there is someone who wants out. And when you do see decreasing volume as the share price pulls back, that is telling us the amount of sellers is actually drying up. And that is the time you might want to think about taking a position in the company or any company, not only Xantippe Resources. Now on to Vysarn Limited. This is a holding company of Pentium Hydro, which is a hydrogeological and dewatering drilling business. This company has a market cap of $35 million, revenue of $37 million in trailing 12 months, and they have increased their revenue quite well over the past few years. I think that could be because this was a merger between two companies, if I remember correctly, and then they changed the name to Vysarn, and they also have operating cash flow of $4.6 million in the trailing 12 months. So this company is operating cash flow positive by a fairly large amount with a market cap of only $35 million. That does look sort of interesting right now. The other interesting thing about Visen Limited is what's happening with the chart. So the share price has really done nothing over the past, we'll say 9 months, but the share price was going sideways for about a 3 to 4 month period, trading between about 8 and 9 cents. And over the past month, we started to see a little bit of increase in volume, which is telling us the market is getting a little bit more excited about this company. And the share price has broken above 9 cents. And it does look like the share price of this company is wanting to move into an uptrend. And there is some positive sentiment behind this company right now. So those are the reasons why I've put this onto my potential buy watch list. And if I continue to see the share price rise from here with a market cap of only $35 million, operating cash flow positive, increasing revenue, this could be an interesting buy in the future. HRL Limited is a company I've been following for a long time simply because they are an environmental sort of company. They provide sampling, lab testing, and data management services in Australia and New Zealand. And this is the weekly chart that goes back all the way to 2016. And nothing has really happened with this company just by looking at this chart. It's really gone sideways. And of course, we've seen times where there's a little bit of hype in this company, say back towards the end of 2017 and 2018, share price rose from 7.5 cents to over 20 cents in about 6 to 9 months. And there's been other periods where there's been a lack of hype, lack of interest in the company. And that's when the share price falls to 7.5 cents. And 7.5 cents is a real strong support level for this company. In fact, 7.5 cents has been reached 4 times in the past 4-5 years. And each time, 7.5 cents holds firm. And only 2 weeks ago, we saw 7.5 cents tested again, and the share price has rebounded off that level and is currently at 8.7 cents. So probably the most interesting time to have taken a position in this company would have been 2 weeks ago when the share price was hovering around 7.5 cents. That would have been a low risk buy position, because if the share price or that support level was broken, that's an automatic sell, but the share price has rebounded. So I wouldn't absolutely call this the sort of company you want to own for the long term. Now, HRL does have a market cap of 44 million, revenue of 36 million, and is operational cash flow positive to the tune of 2.4 million. The question for me is whether they can grow revenue, operating cash flow over the next few years. I think that's a massive question for this company. I think the market is thinking likewise, and that's why we haven't seen significant growth in share price over the past 5 years with this company. Rectifier is an interesting and fascinating company to me. They develop and manufacture high reliability and high efficiency power conversion products. So just think of charging stations for electric vehicles. They provide technology for that. So you can understand why this company, or why the market might be interested in this company. They have a market cap of $80 million, $12 million of revenue, though it has fallen over the past few years. They are slightly profitable in the trailing 12 months and slightly operating cash flow negative in the trailing 12 months. But the main thing when you look at the chart is what's happened over the past 5 months since November last year. Before November last year, the share price really was doing nothing on very low volume. Not sure why, because this company is in the electric vehicle space, and I thought the market would be way more excited about this company than it has shown. But the company did release a couple of really interesting announcements in November and February, and the market reacted really positively on the day to these announcements. Share price increased over 100% on each occasion. But on both occasions in subsequent trading days, share price pulled back all the way to the 50 and 100-day moving average. And if you are interested in this company, that's the time to take a position in Rectifier Technologies. I do think there is a lot of potential for this company over the next 5 to 10 years, simply because of the space they are in. This is just a personal thing, I would prefer to put my money into these sort of companies instead of electric vehicle manufacturers and lithium or even cobalt, nickel sort of companies, those commodity-based companies, simply because these are the companies that are really going to benefit from the explosion in electric vehicles. Sort of like the mining or the gold mining companies back in the 1800s. It's the guys that sold, or the girls that sold the shovels, the picks, even the Levi jeans, or even Levi himself who made Levi jeans. Those are the ones who became profitable, not the gold diggers. Most of them never found gold and they lost a lot of money. So you always want to sort of invest in those companies that will absolutely benefit from the electric vehicle expansion we're going to see in the next few decades. And it's these sort of companies, Rectifier Technologies, that will definitely benefit. The first fallen favorites is Nearmap. This share price of this company has been falling for at least a year, and share price has been in a well-defined downtrend. This is the daily chart, and I have portrayed the well-defined downtrend by the sloping blue line, a downward sloping blue line. Share price of Nearmap has been below that downtrend for quite a while, and each time we see the share price move towards that downtrend, the share price pulls back on increasing volume. Now, just a few days ago from when I'm doing this video, on the 1st of April, share price actually increased 16% when Nearmap released an update to the ACV, annual contract value. It now exceeds $150 million. So the growth of this company in terms of revenue, annual contract value is definitely there. You can't argue that. But we're in the time right now when these sort of companies have to prove to the market that they can transform that increasing revenue into cash flow, into profitability. And that's the one thing I want to see from Nearmap moving forward. And the other thing is the share price is still in a downtrend. There's still negative sentiment in this company simply because share price has been significantly higher in the past. In fact, in these sort of situations, when a company releases this sort of update to the annual contract value, or it could be a profit upgrade, I want to see the share price be at least a 6-month high. And for Nearmap, it was only about a 3 to 4 month high. And the reason I want to see at least a 6-month high is because that leads to less resistance for the share price to rise, because there's going to be less shareholders out there who are bought in at a higher share prices. So I want there to be less resistance. If there's less resistance, there's more opportunity for the share price to rise. So at this point in time, even though I did like this announcement, it is promising from this company. It's just the amount of shareholders who are bought in higher prices, who want to sell out, that's keeping a lid on the share price. And that's why we have seen share price pull back over the subsequent trading days after they released this announcement. The second fallen favorite is Mesoblast. Now, I did get caught up in the hype of this company during 2020. You can see the share price rose from about $1 all the way to a high of $5.70 during a very short period of time. But during 2020, particularly the last half of 2020, there was a lot of volatility in this company. They released some positive announcements, but the negative announcement this company released outweighed any positive announcements. And that's why we saw the share price drop from $5.70 all the way to a low of just around $1, which was reached just a few weeks ago. Now, the reason, and the only reason I'm interested in Mesoblast right now, and the reasons, in fact, there's a lot of reasons not to be interested in this company. They bleed a phenomenal amount of cash because of all the stuff they have in the pipelines. The only reason to be interested in this company right now is the share price is just above a really strong support level at $1. The share price has reached $1 4 times in the past 6 years, and the share price has rebounded off that $1 support level on strength. We saw this 3 weeks ago. Share price fell below $1 for a very brief amount of time, and that's when we saw a lot of buying. So the market knows $1 is a strong support level for this company, and that's why you do see buying. If the share price falls below $1, that would be an extremely bearish signal for this company moving forward. So the best time to take a position in this company would be right above $1. And if it falls below $1 on high volume, you'd automatically sell. So the only way I'd take a position in this company would be a trading position. I wouldn't hold this company for the long term unless they release some really positive news. And if they do release some really positive news, that's when you might see the share price take off. That's all I have for this video on 6 companies that are on my potential buy watch list. If you do have any questions about these 6 companies, any thoughts, I'd love to hear your opinion, love to see your questions. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. Bye.